A lot of traders on YouTube always show you their big wins, the massive green days, and their very large paychecks. Well, this week I am going to show you the total opposite. I took this one trade, just one single trade for the whole week, and as you can see, it was a losing trade. So if you're here looking for daily wins, you're absolutely at the wrong place. But if you want to know how a losing trade can still prove that your strategy is perfect and why stepping away sometimes is the most profitable move you can make, then of course you're in the right place. If you're new, find the channel for the first time, welcome. We trade the Nasdaq over here. If you're returning, welcome back here. You know what's up. Don't forget to hit that like button, turn your post notifications, and subscribe to the channel. Now, just so that we're clear, my absence on the chart was not because of the loss that I took. As you can see, the red wasn't some major account killer, right, that made the rage quit on our accounts. In fact, it was just a pretty minor hit that you can see right over there. Because I was jam slammed with real life. I was very busy traveling and didn't quite have the time or the focus to be glued on the charts. So yeah, of course, the loss on Wednesday was simply, that signal to me that the focus was elsewhere. And the most responsible thing a trader can do is, to just step away. And now I'll show you exactly what happened, why that decision was very important that I took on Wednesday. So right here on my Nasdaq, in fact, let's just check out the inner circle first. As you can see right here, I told them we got stopped out. This was the trade, the only trade I sent in the inner circle. Well, minus this gold trade that we were swinging. Gold is still, a swing trade, and we were up 900 pips. But then the fresh signal that I gave was this one on the Nasdaq, and we actually got stopped out, as you can see right over here. So on my Nasdaq chart, as you can see exactly where that trade went wrong, right? So if you've been following the charts for quite some time, you totally understand what I'm talking about. And, I need you to listen carefully here, because this is a mistake that so many traders make. And this is actually a huge lesson to learn right now. As you can see, my stop loss was not at the right place, right? It was placed at this exact key level, right? At this exact key level, I ignored a lot of things right over there. What was my stop loss? My stop loss was 23,000, right? 23,000 is right at this level that you can see. This is 23,000 right on my chart right over there. Let's just zoom that in. And you can see that I placed my stop loss at the wrong spot, right? What did the market do? It came right into that zone, and then it tapped my stop loss, and you can see what it did. It just shot up, completely reversing in my intended direction right over there. So why did I make such a silly mistake, right? Why was my stop loss at such a vulnerable spot right here? The answer is very simple. Because I didn't pay attention to the full picture on the charts. If I had, I would have immediately seen that my stop loss was not supposed to be at this level. You never place a stop loss at a direct support area, right? So do you see what I'm talking about? You're supposed to actually see it immediately as I mention it at a direct support area. Just look at that. We had a breakout of this level. We even had a build up right at that zone right here. We had a build up. The market broke out of that area, came back to retest that spot. And then I put my stop loss right at a support area, right? That is such a rookie move to make. The correct move, the professional move, is to place your stop loss below these support areas, right? If I had done that, I would have also adjusted my entry point, right? So if my stop loss was going to be right below this level, then if I had taken in consideration this level, then my entry point would have been dropped also to that zone. So I was more like liquidity at this level. You can see the market took me out and moved in my intended direction. So I would have also adjusted my entry point to make the risk to reward ratio make a lot more sense, right? So it's a very simple error that I made there. A very simple error, but the reason that's the reason that I ended up taking a loss on that trade. Just by looking at the charts right now, we can already tell that Nasdaq has gone back to its all-time highs. We're gonna go on ahead and look forward, right, for the new week. Before we dive into the weekly analysis, the first thing that we always want to do is to check news. Let's see what the economy calendar is saying and what it's looking like. What kind of volatility we have and what we should be expecting for this current week. core CPI. On Tuesday, Monday, we don't have any news. Wednesday, we have crude oil, and we have PPI and the initial job claims on Thursday. So, it's not looking so shabby. The whole week is not looking so bad. Be better prepared for this current week. Let's just go straight onto the charts, and we'll start with the Nasdaq chart for the weekly analysis. All right, on the Nasdaq here, we will start by deleting every single thing that we have on our chart and have a clean chart. So like I was saying, you can already see that Nasdaq has gone back to, almost getting to the all-time highs, which is really crazy because this would have been an absolutely good move, right? So we do expect to get, new highs on the Nasdaq because the movement has just been perfect. It has, continued following the trend, the uptrend that it has been showing us for quite some time. And if you've just been taking that concept of not going against the trend, you would have caught these really good movements on the Nasdaq, right? Even on USD, because I can see USD, you can see we are up plus 0.5% right over there as we closed off the week. So that was the Friday thing. So hourly chart, you can already see that we can pull out a trend line on the Nasdaq for this thing, right? We can absolutely pull out the trend line like this. So we already have established a trend line there on the Nasdaq. This is just a rough sketch, and what we want to do is to find an entry point, right? So obviously our entry point, we'll want to start from this zone. I think I sent something like this in the group, right? Let me just check out. I think I sent something like this that I'm looking forward to actually get a nice trade on the Nasdaq like this, right? Let's just check out in the free group if I'm not. Just look at that, right? This is still the hourly chart also. And, wanted the Nasdaq to come to this trend line, or to the support area or close, which is exactly what it did. So if you are using that setup, this is exactly what it did. You see, it dropped close to this zone. So you would have taken it as a trade at the support area right here, because we have a support area here. You see a breakout, and then it came back as a support. You'd have caught this movement right at the zone and rolled up the trade to the top. So what I expect Nasdaq to do is to come back to our trend line, to retest it and then bounce off of this level and also retest this support area, or just to break out of these highs and then forms a new support area right at this level. The very same basic thing that we always talk about. That's exactly what we always want to see. We always want to see the chart doing that very thing that we are familiar with, and then we take it up from there. So if we get a nice breakout here, then automatically our new support becomes this area where it broke out of. So we'd expect the market to retest these zones and then for us to ride it back up to the top, right? So let's see if the daily time frame will be saying anything different. I don't think so, right? It's actually one and the same thing. So we would face a little bit of, or we could face a little bit of a rejection as soon as Nasdaq gets to that zone, because that is what resistance is all about, right? So resistance is when the market gets to that zone, it should get resisted to drop back, right? We expect the sellers to step in there, but if the buyers overcome the sellers, then they're going to break out of that level, which they have been doing, right? The buyers have been dominating for the whole time on the Nasdaq. So that's exactly the simple analysis that we're going to have on the Nasdaq. And on US30, one and the same thing, just according to our weekly analysis. Little slight difference, because I did expect US30 to bounce off of this level, right? So we did say two things. We said it could come. My preferred entry was if it comes into this zone, right? But you can see that it just decided to respect the trend line zone, right? So it came into the trend line zone, it rejected in that trend line zone. So your job was to go on to a lower time frame and see good price action. Just look at that. Good price action. You literally have, this is more like a morning star formation, something like that. You see, we have this bearish candle and little dodgy candle and then a green candle. This was a signal that this rejection has been confirmed. You would have jumped into the trade right at the next candle with your stop loss right below the trend line. You'd have caught the big movement also on US30, just like we analyzed, right? So let's see what US30 is saying for the new week. I am still, still strongly inclined to US30 breaking out of these levels, especially if it comes back to the zone, right? If it comes back to that zone, you already see that we have 1, 2, 3, or this will be the 5th time US30 going back to that zone. Then at that level, I'm really expecting a breakout, right? But if we notice the level that US30 is at right now, we are right at this area here. So that is a strong zone. Why? You can see that we had this candle. Let me just show you. Right, so you should pay attention to the price action all the time, right? pay attention to price action. Look at what's happening. You saw that the buyers pushed this candle to this area, and then the sellers dropped it right back. And then now the buyers are forming more like a momentum candle. You see, this is a full candle, a momentum candle. So it means that the buyers and the sellers are really debating in this area. So it's not a good place to buy or to sell, because we don't know who has, who will win the battle that they're having at the zone. You can see that the sellers had dropped this market with such a strong movement. Then the buyers stepped in with a stronger movement, because this is a full momentum candle. This candle is actually stronger than this red candle because this candle has a longer wick. It shows that the sellers had dropped the price to this level, and then the buyers gave them a little wick, and the buyers pushed it with a full candle. The sellers just showed a little bit of a resistance right at this area, but it wasn't that much of a resistance, right? And then when they came here, this is where they're now fighting. You clearly see that they're showing each other their strength, their power, right? No one wants to let the other person win, right? That's exactly what's happening at this area. So that's what you want to look at, how you want to think when you are dealing with these charts, right? So this area is already a resistance zone just because of that. I always look at resistance zones only because I like to trade in the direction of the trend. So for that reason, I'm going to go over onto my 4-hour time frame. Let me just delete that. And now it makes so much sense, right, on the 4-hour time frame. So if we break out of this area now, even though I don't want to really consider this as a trend line, but it could work, right? It could work because this is a 4-hour trend, right? So if we have this as a little trend line, and then we have the market going and breaking out of this area, notice it will come into this zone, right? Now, if you see that zone, it's also an area of resistance, right? Because of these candles that we're having here. The battle between the buyers and the sellers, you can clearly see it happening here. And then in this case, the sellers, won the battle, and then they dropped the market. But then they left this area to become a resistance zone again, right? So if we break out of this area, we are still in a resistance zone, right? What would expect the market to do is to probably come back and then respect this trend line and then bounce off, or we wait for it to completely break out of the zone. Then we already know that it's heading to that next zone, and then we ride the movement up to the top. That's exactly the simple analysis that we'll have again on USD. Obviously, if it now breaks out of this area, we take a step back and want to look at this area, what's happening, because the trend line first can be disrespected, right? But we'll still have support areas to then, hold us and to bring us back into the market, right? Then we will not have to do a whole different analysis, or we might even be heading to that level that I said that I wanted it to play off of the very first time. So again, on US30, not complicated. Now, if we go over 2-hour gold chart, as you can see right here, we are absolutely swimming in profit on this gold trade. Let me just show you guys. So as you can see, remember I said this is a swing trade that we had on gold, and currently the market is closed, but this is a trade that we've been swinging for quite some time, and I clearly told the inner circle that this is going to be a swing trade. So we'll go on ahead and just delete our trade, just for analysis purposes, right? So if you're not in the trade and then you want to join the trade, now the very same thing I was saying the last time I made this analysis, or the last week analysis, it hasn't literally played out, right? The reason why I'm still in the trade is because the setup has not yet completed. As you can see, gold still needs to come to that level. It has to break out of that zone. That zone is acting as a magnet. It's drawing gold to it, right? Because this is a level of liquidity. There are a lot of traders that are here. They're looking forward to come and sell this market. I'm telling you, there's so many traders that when the market gets to the zone, they are going to sell, right? And then the market is, just going to take out their stop losses. And when we have those that will sell as soon as it gets to this level, and then it will take out these stop losses, right? This is an easy trade because it's quite obvious. Let's keep in mind that nothing, of course, is 100% in trading, right? I am not saying that that's exactly what's going to happen. It's just a prediction. That's why I'm analyzing. But there's a high chance, right? There's a higher probability of this trade breaking out of this area. Just simply, not even because of anything else. The retail traders are looking at this level. Their eyes are wide open right at the zone, and they also want to sell gold as it gets to that level. So if you're not in the trade, we're already in the trade with the inner circle. We will swing this trade until it breaks out of this area. Whoever left this trade and joined the inner circle, that is totally your fault. Because why would you do that? It was a clear instruction that this is a swing trade, right? So if you're not in the trade, like if you're not in the inner circle and you're not in the trade, where would you want to join this movement, right? You want to actually wait for it to actually probably then break out, right? If it gives a retest, then you want to come to this area and then catch the retest if it does, right? Let's see maybe on the lower time frame if you can get a better entry or a faster entry. Right now, what's happening here? Zoom it up so you can see that. So the sellers pushed this market to the bottom, the buyers pushed it right back. They got to this level, the sellers stepped in again, they pushed the market, then the buyers have stepped in right now. So you can see there is a battle happening between buyers and sellers again at that zone, right? So this is price action. That's exactly how you want to use price action. So for that reason, we'll now consider this as a resistance zone, right? So we're saying if the market breaks out of a resistance zone, it will turn that zone into a support, right? So the very same principle, we break out of this area, we close outside of it, we get a good retest into the zone, and then we ride it up. That's exactly what you want to do if you're not in this particular trade. Absolutely nothing difficult, nothing complicated on both these charts, on 3 of these charts, right? And we're looking forward to having a really profitable week. I think I'll have more, I don't think so, but I will be checking the charts, a lot more often than last week. Now, if you did enjoy this video and you found this breakdown helpful, don't forget to hit that like button, turn your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'll see you in the next lit video. Love you guys.